Namaskar, welcome to Kalam IAS. This is Vasudev Singh Bhati and this is the session of News Case by Kalam IAS. So, news case is basically we bring you the most important news in the week, and I am doing the economy section of the news case. And in economy, the most important news in the week was Bank of Japan raising the interest rate. Now, it is a very curious case where the interest rate in Japan was negative, and this is the first time in 17 years that Bank of Japan has raised the interest rate. This is the first time in 17 years that Bank of Japan has raised the interest rate, and the interest rate has been increased from minus 0.1% to between 0 to 0.1%. So the interest rate before today was in negative. So this is the first time a lot of aspirant must be hearing about it, that can any bank have a negative interest rate. And so what do we actually mean by negative interest rate, and what was the interest rate history of Japan? So if you look at the interest rate history of Japan, then in 2007, Japan had raised the interest rate from 0.25% to 0.5%, and after that it stayed there for 2 years, and they reduced it in 2008, in 2009 they reduced it again, and after that they kept it positive till 2016, and in 2016 Japan took a drastic step of bringing in the negative interest rate policy. Now in the negative interest rate policy, what happens is the interest rate is kept negative, that is you have to pay money to keep your money in the account of a bank. Now the negative interest rate was not actually charged by the banks, it was charged by the Central Bank of the Japan. So from 2016 to 2024, the Bank of Japan, the Central Bank of Japan was charging other banks, the commercial banks, to keep money with it. For example, in India, the repo rate is the rate at which banks RBI lends money to the banks, and reverse repo rate is the rate at which banks would keep their money with the Reserve Bank of India. So similarly, Bank of Japan also has a policy rate. So the policy rate in Japan was negative, and as a result the banks had to pay an interest rate to keep their money, to park their money with the Japan's central bank. So Japan introduced the negative interest rate in 2016, and there were other countries also which introduced negative interest rate. It happened mostly after the 2008 financial crisis. After the 2008 financial crisis, a lot of developed countries, especially it happens mostly in developed countries only, developing countries do not need or do not actually require the negative interest rate policy. It happens when these countries are affected by deflationary cycle, and in the deflationary cycle we will read it in details as we move forward, that the prices go down and the investment go down, and as a result the economy overall goes down and the growth of economy becomes stagnant. And after exiting from the negative interest rate policy, Japan was the last central bank that was still having the negative interest rate policy. For example, Sweden, Denmark, Switzerland and European Central Bank, all of these had the negative interest rate policy post 2008 financial crisis, but most of them before 2022, almost all of them removed the negative interest rate policy, and they started again charging positive interest rate policy. And Japan was the last major central bank with the negative interest rate policy, and with the 2024 Japan reducing the removing the negative interest rate policy and coming back again to the positive interest rate policy, the negative interest rate era has ended. The era of negative interest rate has ended. So what do we mean by negative interest rate? So negative interest rate is the rate, basically the central bank charge interest rate for parking money with it. So whenever banks keep their money with the Reserve Bank of India, then Reserve Bank of India gives certain interest to them, and we call it reverse repo rate. That is the rate at which that the RBI will return for if the banks are parking their money with the central bank. So reverse repo rate in India, and for Japan it was actually in negative. So when banks had to park their money with the central bank, they actually had to pay money. They actually had to pay money to the central bank to keep their own money with the central bank. So as a result, what the bank did, so if banks actually have to spend money to keep their money safe with the central bank, why would banks keep their money with the central bank? Bank would not keep their money with the central bank. What would then bank do with the cash that they are having? they will give that money to the people. They will give that money to the people, and it will increase flow of money in the economy. And as a result, how will they do that? To give money to the people who are not actually interested in taking loan because of the deflationary, the deflationary economy. The bank will reduce the interest rate. The banks will reduce the interest rate to make the money and to make the loans more attractive for the people. So as a result, bank increase lending to the people by reducing interest rate. People will borrow money from the banks and they will either spend it or invest it, and it will overall stimulate the economy. Now this was the basic purpose behind negative interest rate policy. So we have read about it, that what happens, what the central bank does when there is inflation and what the central bank does when there is deflation. So whenever there is deflation, the prices are reducing. So what the central bank will do? Central bank will increase the money supply. How does the central bank increase the money supply? Central bank will reduce the interest rate. Central bank will reduce the interest rate. So as the interest rate reduces, money become cheaper for the people and people borrow money. And if people have more money in their pocket, then the value of money will reduce. We have talked about it, demand and supply. Whenever there is supply, whenever supply of anything increases, its value will reduce. So if the supply of money increases, the value of money will reduce. If the supply of rupee increases, the value of rupees will reduce, and as a result the prices of goods and services will increase. Whenever the value of rupee reduces, the prices of goods and services increases. If people have more money in their pocket, they are ready to spend it, and if they are ready to spend it, then the prices of goods and services will increase. So we have talked about it, ek anar saw bimar. We have taken the example that if the supply is less or demand is high, then the prices will be high. If supply is high and the demand is less, then the prices will be low. Now, if the money's supply is high, then the prices of goods and services will increase. If the money supply is high, then the prices of goods and services will increase. If the money supply is low and the supply of goods and services is low, the money supply is low and the supply of goods and services is high, then the prices of goods and services will reduce. So this was done to stimulate the economy, which was in deflationary cycle. So why negative interest rate was introduced in the Japan and or in the other developed countries, for example the Nordic countries? So it mostly happens when the central bank run out of the interest rate area, when the interest rate is already around 0% and still there are deflationary signals in the economy. So the central bank run out of options to stimulate economy. Central bank goes into the negative interest rate policy, and the primary purpose is to increase growth rate as well as to break the deflationary cycle. What is deflationary cycle? We will read it in the next slide. So Japan has been dealing with the deflation as well as the stagnation. Deflation basically means reduction in prices. This remote today cost 100 rupees, and 1 year later if it costs 90 or 95 rupees, that means there is deflation. The prices of goods and services, instead of increasing, actually are reducing. This phenomena is not seen in the developing countries. This phenomena is seen in the developed countries only, which have saturated. And these developed countries, especially Japan and Nordic countries like Sweden and Denmark, these countries have saturated the level of development as far as the current technological development we are talking about. Then the prices of goods and services will not increase further, and the prices of goods and services will start reducing. And what will happen because of that? It kickstarts the deflationary cycle. We will talk about that in the next slide. So the Japan was facing the deflationary cycle, and deflation and stagnation. Deflation is basically reduction in prices, and stagnation is the economic growth of the country has stagnated or not increasing at the required rate. So Japan had been facing these problems since the 1990s, not just in the past decade, but from the past 3 decades Japan had been facing this problem. So to kickstart borrowing as well as lending and increase money supply in the economy, and to stimulate spending in the people, the banks would, the central bank would reduce or bring in the negative interest rate policy. So this is how the deflationary cycle looks like. So if the prices are falling, that will lead to companies cutting cost. If the prices are falling, then why would I buy this remote? For example, if I do not need this remote, for example, I am talking about a pen. Now I already have a pen and I do not need another pen. But if I see that the prices are going to rise tomorrow, then I will purchase and stock it for the tomorrow's purpose. But I know that I don't need this pen today. I need this pen 1 year later only. And if I need this pen 1 year later only, then I know that 1 year later the price of this pen is going to be less than what it is today. I have 100 rupees in my pocket, I can buy a pen, or I keep that money in my pocket and 1 year later I go to the market and buy the same pen at 90 rupees and keep 10 rupees in my pocket. So that is a profitable thing to do. So if the prices are expected to fall in the future, then the demand for goods and services will reduce. If the prices of goods and services are expected to fall in the future, then demands of goods and services today will reduce, because people expect that the prices are going to fall down, then we will purchase it tomorrow, we will not purchase it today. So if the prices are falling, then the demand of goods and services will reduce. If the demand of goods and services reduce, then the company's profit will also reduce, and if the company's profit reduces, if the demand of goods and services are not there and the company's profit is reducing, then company will try to cut the cost, because if the profits are reducing, then the company will have to cut the cost to increase its profit. So company cuts the cost by laying off people. By laying off people, it will give less working hours to people, and it will reduce the wages of the people, or it will lay off the people. So if mostly what happens is wages of workers are reduced, or they are not increased with the general price trends. So the wages of workers is reduced. If the wages of workers reduce, then workers will also spend less money. Now workers will also spend less money, and if they spend less money, then again it will reduce the demand of goods and services, and this creates a vicious cycle of deflation. It creates a deflation's destruction. It is shown in the cycle that it creates a vicious cycle of deflation. Deflation is as bad for the economy as hyperinflation is. Whenever the prices are rising exponentially, for example in Zimbabwe the prices were rising twice every day. Today this remote is 100 rupees, tomorrow 200, the day after tomorrow it is 400, then 800. The prices were rising exponentially and it destroyed the Zimbabwe's economy. Similarly, whenever there is deflation in economy and it is not controlled within time, then it will also destroy the economy of that country. So this is how deflationary cycle looks like. There is deflation, there is less demand. Because of less demand, the companies are less profit, so they reduce the wages. If there is reduction in wages of employees, then employees will spend less money, and if the employees spend less money, then it will again result into decrease in demands of goods and services. So what changed recently, that happened because of which the Nordic countries in the past 3-4 years, as well as the European Central Bank and the Bank of Japan, has again removed the negative interest rate policy and brought in the positive interest rate policy. So what changes were seen was robust wage hike seen in Japan. Robust wage hike seen in Japan. For examples, union secured an average salary increase of 5.2% in 2024. The unions this year have secured a 5.2% increase in salaries. A 5.2% increase in salaries. Earlier, the increase in salary was only 2 to 3%. Every year, the increase in wages was only 2 to 3%, but this year the unions have increased this, have successfully increased the salary from 5.28%. They increased the salary by 5.28%. So the salary wage hike have been very robust in the economy. At the same time, inflation was also there of 2.2%. The inflation target of Japan is 2%. For example, in India, the inflation target is 4%. That is a good rate of inflation for a developing country like India. For a developed country like Japan or Switzerland, the inflation has to be lower than 4%. The target of inflation for the Bank of Japan is 2%. And in January 2024, the inflation was seen to be 2.2%. So the inflation, the increase in prices as well as the increase in wages are seen as a good signal, and it creates a virtuous cycle of inflation. It creates a virtuous cycle of inflation. So the president of Bank of Japan said in the interview that the virtuous cycle of inflation has solidified in Japan, and as a result, we are taking policy action to increase the interest rate in the Japan, and will try to sustain the wage growth as well as price increases over a long period of time. So how does the virtuous cycle of inflation looks like? So the rise in prices of goods and services, if tomorrow I expect that the prices of goods and services are going to be more than today, then I will spend more, I will purchase the goods and services today only. For example, it happens in vegetable. When the prices of vegetables starts to rise, people purchase and stock vegetables for at least a week. So they will say, okay, for the, if we expect that the prices will rise in the future, then I will purchase this today only. For example, it happens in fuel, that the government announces that after day after tomorrow the prices of fuel will increase by 5 rupees. Then today everyone will go there and fill up their tanks. So whenever you expect that the prices of goods and services are going to rise in the future, then you purchase goods and services today only, and it results into increase in spending and increase in demands of goods and services. If there is increase in spending and increase in demand of goods and services, the sales of companies will increase, and as a result the income of companies will increase. If the income of companies increases, then they will give more wages to the worker, they will give more employment to the people, and if there is more employment to the people and people are getting more wages, then people will spend a lot of money, and if they spend money, then again it will fuel the demand of goods and services, and it will create a virtuous cycle of inflation. Of course, the virtuous cycle of inflation, the inflation has to be moderate. Inflation cannot be hyperinflation. For example, the Zimbabwe's example we took, or the recent inflation of about 6% in India or about 8% in USA. This is not a good rate of inflation. The good rate of inflation for developing countries like India is around 4%, and for developed countries like USA or Japan is around 2 to 3%. So Japan has a target of 2%, and this year they were able to achieve this target with a slight margin of 0.2%, that is 2.2%. So they say the virtuous cycle of inflation has returned, and as a result they increase the interest rate to 0.1%. So this was it from my side today. Thank you very much. We'll see you in next class. Thank you.